Today I'd like to talk about how the sell side, or how banks are basically organizationally structured. This is only a template, and I'm only giving Citibank as an example. This is not to say that Citibank is specifically organized like this, and this is not to say that every bank is organized like this, but this is a very simplistic way to understand how many banks roughly organize themselves. Banks are organized into what we call the securities business. So they have a legal entity called like Citibank Securities, and they have Citibank Bank. And so we just refer to it as securities and the bank. There is a wall between these two legal entities. They can talk to each other, but it's not, it's a bit difficult, okay? So generally people in here are free to talk to each other, and people in here can generally talk to each other, but a bit harder between the two. And sometimes you will find that the bank and securities actually physically have different locations as well. Now, in the securities side of things, there are three main departments, or I should say divisions: fixed income division, equities division, and investment banking division. During my recruiting career, I have never placed anybody into this area. I've never really worked on a search in this area. It's not something that I would approach. And at this point in time, nobody at Next Step covers this area. However, this area I have been covering for a very long time, investment banking division, and it is the division that typically does things like M&A, underwriting, and is generally considered the backbone of many banks, okay? And then we also cover corporate and commercial banking. And there's some similarities between these two groups, and these two groups definitely talk to each other, but the products that they offer are fairly different.
Hello everybody. Today my name is Brandon, and I kind of wanted to go over corporate and commercial banking with you, as that's one area we cover here at Next Step. And I hope I kind of broke it down to kind of help understand what it is. So to begin with, as Tim mentioned it earlier, banks are split up into two things pretty much: investment banking and corporate commercial banking. And there's a wall in between. So this is the corporate stuff. Tim will talk about, or has talked about, the investment side of things. But essentially, the commercial and investment banking are broken down in the same sort of way, with front office, middle office, and back office. Here at Next Step, we mainly focus on the front office and middle office when it comes to banking. There is an in-between area that's kind of not in the front, but not quite in the middle as well. So you can note right here, but it's not so important. These people just are more proactive helping the front office. That's the big difference. But they're not so much client facing. So front office usually means that they talk with the clients face to face. They're the ones who start the business. And then you have the middle office, which supports it. Supports the front office and gets things going. And then you have the back office, which supports the whole organization, from HR to accounting and finance and IT, that sort of stuff. But what I want to talk about today first is kind of what corporate banking is broken up into. Now, corporate banking and commercial banking are technically two separate things. Some banks do have a corporate and commercial banking division, but here in Japan, it's mostly put together. Not in all cases, but for the most part, when it comes to foreign banks. So we're just, for the sake of this film, we're just going to include them together. So corporate banking is broken up into pretty much three main areas here in Japan, which would be corporate coverage, transaction banking, and financial institutions group, way over there. So starting off with corporate coverage, you have the front office, which is manned by relationship managers. And this can even be broken down into domestic companies, which would be a normal relationship manager, or multinational companies, or MNC sales. And that's pretty much what the front office does there. And then they have this in-between area, which I talked about earlier, with some credit analysts, and they assist the relationship managers in their business. Okay. Then moving along, we have. I'm gonna skip transaction banking because it's a big area. We're gonna go to FIG, which is very similar to the corporate coverage. So corporate coverage, they cover corporate companies and businesses, whereas the FIG, the Financial Institutions Group, covers mainly other financial institutions, insurance companies, and so on. They also have relationship managers, that's pretty much what they do. They might have an MNC sales, multinational sales, but generally it'll just be relationship managers. Sometimes FIG can fall on both sides of the bank. So some banks have two teams, FIG, one on the investment side and one on the corporate side. Or which is becoming more popular at the moment, is hybrid bankers. They have bankers who can, what they call double hat, which means they can sell products on both the investment side and the corporate side. A good example of that would be HSBC. Their FIG team is on the corporate banking side. However, they are able to sell security products. And they also have credit analysts that assist them with their business. So now moving on to another big area that we cover here at Next Step would be the transaction banking division. Transaction banking is quite big in Japan. So it's very important, this area. And it's split up into mainly, I put the basics down. It can get more complicated, but it's mainly split into two sections, cash management and trade finance. Now, I'm not going to focus so much on trade finance today because it's an area that isn't really hiring at the moment and is dominated by the Japanese banks. So it's harder for foreign banks to compete. But cash management is quite active. And what you have is it's broken down again, kind of like the relationship managers. They have cash management salespeople who also cover MNC sales, but they also do financial institutions group sales. But beyond that, you go into the little area, they have a product team. So we also recruit for product. And these guys are, because cash management is a very specific banking product, they have to kind of specialize it to each company. So that's why you have product specialists who can kind of go in, talk to the client, understand their needs, and come up with a solution. And then you have, with this, then you go into the middle office with transaction banking, and you have implementation. Now, these are the guys that talk with the product guys, find out what the solution is, and then implement it. Usually this is an IT thing. So you'll find that a lot of implementation employees have an IT background. So they work closely with the product guys. And then you have client services. And they really make for a smooth transition from the product and implementation. If there's any problems, the client will contact client services and say, there's a glitch with one of your products. Can we get a solution for that? And they assist with that. So they work with the product people and implementation people just to make sure that the client is happy, essentially. And then, yeah, so that's transaction banking for the most part. And then you have the trade finance where you do have the sales and the product as well. But this is the more important stuff, the cash management for now. And then kind of going back to the middle office is kind of similar throughout. It does vary. to which section you're working with a little bit, but essentially, I should have wrote it all in, but operations goes through all of them. There's an operations team. Then they all have a risk management as well. Is it worth the risk to work with this client? Then there's the treasury division, which kind of covers everything as well. Each team should have their own KYC, which means know your client. Now this is ever increasingly on demand with all the regulations in Japan and the world. Banks really have to do their due diligence, and KYC is essentially due diligence. These people come in and make sure that, you know, their clients aren't doing anything illegal or laundering the money, or, you know, if a country has some regulation about doing business with somebody who sells, for example, weapons and stuff, they would have to have a KYC person kind of come in and say yes or no. And then they work closely with compliance. And compliance is just making sure that the company are all legitimately working, they're following the regulations, and are staying compliant. Yeah, and then the back office covers everything from HR, finance, and IT. Yeah, I think that's everything. Thank you.
Now I'd like to talk about the investment banking division and how, again, generally it's set up. Not every bank is set up identical to this, but this is a good template, and in Japan this is, you know, very common. So you have the investment banking division here, and below the investment banking division there are kind of three main areas. There's an area called capital markets, an area called M&A, an area called coverage, or sometimes it's referred to as corporate finance. Capital markets is divided generally into two areas: equity capital markets, or ECM, debt capital markets, and DCM. So ECM is the group that helps companies underwrite an IPO. So if Facebook wants to go public, they would call the equity capital markets department, and they would talk to them about, you know, helping them to become a public company. And if Facebook in the future then wanted to issue bonds, they would talk to debt capital markets. The M&A group is the group that helps companies acquire other companies. So Facebook, which is a very large company, wanted to buy a smaller company, they would talk to this group and say, hey, we're looking to buy a company in Japan that is, you know, $1 billion, that is in the technology sector, for example. And then this M&A team would come up with some ideas, and, you know, they would then do, you know, they would price that company and say, this is how much we think it's worth. And they would do this because they're doing valuations on the price of that company, and they're doing a lot of the modeling to come up with a valuation for that target company. And then this, and what we call in investment banking, these two teams are referred to as product teams, okay? So they're not the primary team to face the client, but they generally go in and talk to the client after the coverage team initially engaged the client. So the coverage team is basically you can think about it as a sales team, okay? And they are the ones that are having the primary contacts with a variety of different companies. And the way it's divided is by industry. So we have here technology, telecommunications, media, or TMT area. We have the financial institutions. This can be like banks, securities firms, insurance companies, asset management companies, leasing companies. This all falls into financial institutions. And then down here is the general industry group. And general industry group is basically anything that doesn't fall in here comes into here. So this can be like consumer, retail, big industrial companies, chemical companies, healthcare companies, many different types of companies. These people are the primary contact for investment banking services with these large corporates. These companies would, these people Once they talk to the company, they understand what the company wants, they would then pass kind of it over to the M&A group or the capital markets group, just depending on the needs. And then how banks are generally organized by title. When you first start as a new graduate, you're considered an analyst. And after 3 years, you become an associate. And after about another 3 years, you become VP. And then kind of from VP to managing director, there's no kind of set, let's say, timeline. But typically, managing director, if somebody was like mid-30s and they could become managing director, that would be considered very quick. But I would say in Japan, probably people turn managing director sometime late 30s to mid 40s. So that's how that is basically set up. And most banks are set up, like I said, kind of like this. The number of people will be relatively balanced between these three groups. And as I mentioned before, this is called the sell side, but we also deal a lot on what we call the buy side. And the buy side is companies, so the sell side are companies that are, selling something, okay? And the buy side are the companies that are, buying something. So it kind of makes a lot of sense. Typically what you will find is a lot of people do not want to stay in the sell side forever. And, they may want to go into many different areas, but a lot of them want to go at some point in time into the buy side. Now, to go into the buy side, it's the easiest to move to the buy side when you're an analyst and associate. It becomes a bit tricky when you're a VP, but not, completely impossible. For director and managing director, it is extraordinarily hard to move into the buy side. It does happen, but it's extraordinarily rare. Most, especially at the associate level, that's a very good target for all of these buy-side companies. So the buy-side companies we have are private equity, we deal with private equity, hedge funds, real estate private equity, we don't deal with so much, but from time to time, and renewable energy. Private equity is by far the biggest, or the type of buy-side company that we deal with the most. Private equity basically is a fund that's set up by a bunch of investors who pool their money together to create this fund, and then that fund invests into different types of companies, and they buy these companies, and then they basically try to improve the operations and then sell those companies maybe 5 to 7 years later and make a big profit, okay? And then that big profit is returned to the shareholders plus the people who work at that fund. Hedge funds are doing something kind of similar, but they're basically buying and selling stocks, but they can hold these stocks for a long period of time, and they have a small minority share of these stocks, unlike private equity, which tends to buy the whole company. Real estate private equity is, it's similar to private equity, but instead of buying companies, it buys real estate. So like a hotel or a office building or a residential building. That's what it buys. Renewable energy in Japan, it's typically involved with solar power, wind power, also some biomass and some hydro. And they buy, like kind of real estate, they buy the hard assets. They don't buy the company itself. The skill sets that these places generally want is, I guess there's one other group here I missed, and that is the real estate group. The skills that these places generally want, private equity loves people coming from M&A, and to a lesser degree, but they also really love people coming from coverage. Private equity really doesn't want capital market people. In fact, capital market people are not generally loved by anybody on the buy side. So if you have a candidate, even if they're very good in ECM or DCM, they can be very hard to place into the buy side. There will be a lot of junior candidates who are doing ECM or DCM that want to move out of ECM or DCM and move into M&A or coverage because they realize if they stay in that area, they will just continue to stay in that area forever. The hedge funds, and then I think the real estate private equity, they really like people who are from like the real estate group here. That's kind of like obvious. I think these real estate group people, they probably have a harder time to move into hedge funds or private equity. To a certain extent, FIG people have a harder time to move for various reasons, but definitely it's not a 100% no go. So, but the real targets are M&A, and then like I said, second best, but still fairly decent is people who are in this area. Renewable energy, again, they would take probably anybody in these areas. Okay, I think that's all for now.